World's banking sector has once again come under attack, sending shockwaves through the financial world. A tornado in the banking system has threatened to wreak havoc, taking down everything in its path. Over the course of the last 2 weeks, you will have seen the collapse of 4 banks in quick succession, starting with Silvergate, followed by SVB, Signature Bank, Credit Suisse, and rumor has it that First Republic Bank is next in line. But who knows? Even the biggest and most popular bank stocks across the globe are tumbling in the wake of these recent failures. But I have a very different story to tell. Today I am making a case for contrarian investing. I think it is time to be greedy when the fear in the market is contagious. Well, like me, do you see a buying opportunity? Do you think it's time to buy when there is blood in the streets? Well, the question really is, do you see the glass half empty or half full? Or do you think there is room to add vodka? Well, here is what I see. We are in a phase where everywhere you look, there appears to be bad news in the stock market. So much doom and gloom, and there is every reason to be nervous. A bad or an unexpected news can ruffle the broader markets much more readily and can flush the stock prices lower, regardless of their financials. That's because markets are inherently irrational as they're driven by human emotions. And unfortunately, humans tend to follow market confidence during a crisis and not the real worth of assets. But it's only fair to say not all companies will go down. Well, think about it. That's not going to happen, will it? And if you are a disciplined contrarian investor, you may stand to benefit from this situation. Like in any economic turmoil, there are always companies who are able to sustain without much damage. Stocks with stable balance sheet and a strong history of managing risk. This obviously is not enough to suggest that you should buy the dip, but I genuinely feel a window of opportunity may have just presented itself to buy some of the high dividend yield stocks with modest capital gains. I have 4 banking stocks on my radar which I would like to share with you. Make sure you stick till the end. So here is what I've got. 2 UK banks, Lloyds, ticker symbol LLOY, and Barclays, ticker symbol BARC, and 2 American banks, JP Morgan, ticker JPM, and Bank of America, ticker BAC. I have used 2 criteria for shortlisting these stocks. Money-centric banks, or the giants as they call it, and are focused on the valuations and fundamentals. Let's analyze them in a bit more depth. Look at these stocks over the last few days. They have tanked below 15% just over the last week. But if you closely look at this reversal, it's not an actual reflection on these companies' financials. It's just a symptom of the broader problem in the banking sector post the recent mayhem, an overreaction as a breath. And it's believed to be short-lived, potentially giving a tremendous opportunity to load up. While all 4 banks face mild headwinds and negative pressure in the short term due to their positions as the largest mortgage lenders in their respective countries, a closer look at their financials suggests they don't have massive bad loans on their books. Here you can see the loan-to-deposit ratio for these banks. They all have the lowest risk deposit base compared to the likes of SVB, Signature Bank, and First Republic with higher risk deposit base. So this suggests the likelihood of a liquidity crisis for these 4 giants is much lower. In fact, some of these banks have even gained from the recent crisis in that a lot of depositors have fled from smaller regional banks and moved their deposit into these larger reliable banks. A quick look at their market cap here further suggests that they are in a very strong position to weather the current storm, giving investors a great opportunity to benefit from the recent market volatility. Also, the rising interest rates have helped their net income massively. Let's look at the fundamentals. Here you can see they all have record revenues for 2022 and have equally strong revenues year on year. They also beat earnings in the last 2 quarters of 2022. All 4 balance sheets look pretty solid and they have positive cash flows, which is extremely optimistic. Let's also quickly analyze the financial ratios. All 4 stocks have the lowest price to earnings when compared to the industry average, which is pretty darn good. A low PE translates to a better earnings yield of nearly 15 to 19%, suggesting that these stocks are a bargain. They also have a low price-to-book ratio of less than 1. This is a very good representation of the market value of assets, particularly in capital-intensive businesses like that of banks. And in addition, both UK stocks offer market-beating dividend yields of above 5%, which is a quarter higher than the current bank interest rate here in the UK, making them the top dividend bank stocks to buy right now. I mean, what better way to make your money work for you while you sleep? And who wouldn't want some extra bucks to cope with the rising cost of living, right? As for the US stocks, while the dividend yields are not all that lucrative when compared to their UK counterparts, they have a relatively higher return on equity, which makes up for the difference. All in all, strong fundamentals suggest that these 4 stocks are definitely undervalued, more so after the recent decline. To instill confidence in the markets, regulators across US and Europe have pledged that they will do everything in their power to bring calm to the banking system. This is a very powerful message, not something that you hear every day. Also, recent data suggests the 10-year Treasury yields have fallen over the last few days, thereby increasing the bond prices. This means the value of debt securities that banks hold has increased, improving their financial strength. Well, I don't know about you, but I see a tremendous opportunity here. And it couldn't have come at a better time. As the financial year draws to a close very soon for most countries, these stocks could be a great addition to your tax-free investment portfolio. We have ISA and tax-free pension allowance here in the UK. In the US, they have a Roth IRA and 401k. Be sure to check if you have similar government incentives in place in your country of residence that will enable you to shelter your investments from tax. For those who have it, it may be worth checking if you've used your annual allowance, because if you don't use it by the 5th of April, you lose it. So, there you have it, my 4 bank stocks picks to watch over the coming days. Keep an eye out for trend reversal. And don't forget your glass. Just a quick reminder before we wind up that I am not a qualified financial advisor and this is not financial advice. Please do your own due diligence or seek expert advice before investing. Take care and see you soon.